Hey everyone, welcome to another episode of Stock Fundamental Analysis, where we try to identify potential companies that can create massive wealth for all of us. In today's video, I want to cover a small cap company with a market cap of around 4,000 crore that is an undisputed leader with more than 50% market share in the business it operates. Company recently had its IPO 1 year ago and has attracted investment from marquee investors including the likes of Goldman Sachs, Abu Dhabi Investment Authority, Morgan Stanley, then a PE firm World Invest Asia, which is part of AB InBev Group, which is world's largest brewery company and the parent company of Bhadviya and Corona. And also include names like SDFC AMC, Quant, Aditya Birla and so on. And also include ace investor Mukul Agrawal. Company name is Sula Vineyard. And it's basically a leader in the wine business in India. Now the trend for alcoholic beverage consumption in India is increasing big time, and wine constitutes a very minute portion of that chunk. However, with the growing trend for premium food and drinks, with social acceptance for drinking, wine industry is looking very promising. Not only that, there's also a trend of wine tourism that would again benefit Sula Vineyard. So in this video, we'll cover the business model of the company, its key moat, leadership, then future growth prospect, financials and valuation. And of course, we'll also look at the key risks that can impact the growth thesis. But before we begin, this is not a buy or sell call. This video is only for educational purpose. Kindly do your own research before investing your money. Alright, let's get started. So established in 1999 in Nashik, Sula Vineyard is India's largest wine producer and seller with more than 50% market share. In fact, company's market share has grown from 33% in 2009 to 52% in 2022. Now that speaks everything about the company. A market leader with more than 50% market share. Basically, company has 4 price segments of wine: elite, premium, economy and popular. Elite is 950 plus rupee, premium is 700 to 950, economy is 400 to 700 and popular is below 400. Company offers all kind of wines including red, white and sparkling. It produces 56 different labels of wine under 13 different brands at 4 owned and 2 leased production facility located in Maharashtra and Karnataka. Company's business can be broadly classified into 2 segments. Wine business, that is the production of wine, import of wine and spirit and distribution of wines and spirit. And second is wine tourism business that include your vineyard resorts and tasting rooms. So Sula is a pioneer in wine tourism in India. You can stay with them and enjoy the wine experience. By the way, it is also among the top 10 most followed vineyard in the world. Now if you look at the revenue breakup, in FY23 around 87% business of the company has come from their own brand, 4.7% by selling third party brand. So Sula also import and distribute the third party brands and 8.1% has come from wine tourism. Clearly, the in-house wine business of production and selling forms the largest chunk of their portfolio and the growth has been very impressive. Within the wine segment, the elite and premium segment dominates the revenue with more than 70% contribution. Now, this slide gives a very good idea about the company. So first of all, it has pan-India presence in 26 states and 6 union territory, has a distribution network of 50 distributors, 24,000 plus point of sale and export to 20 plus countries. If you look at the leadership, Mr. Rajiv Samant is the promoter, MD and CEO of the company. He studied in Stanford University and he returned to India in early 90s. In 1994, he came up with an idea of growing grapevine in Nashik and in 96 he set up Sula Vineyard. The name Sula has come from his mother. Then Mr. Carey Damsky is the master winemaker. Carey has worked for wineries all over California and across the world, eventually establishing himself as one of California's best winemaker. He consulted with Sula team several times during the year to jointly review winemaking practice and the latest wines from the vineyard. Okay, before we proceed further, take a minute and imagine this. You have a friend who is always casual about things. Maybe a last minute planner or someone who follows the crowd without questioning. Now picture them trying their hand at stock market. They see others making trades and without much thought, they jump in too. It's a casual approach, right? But here is the catch. Making money in market consistently is not easy. In fact, it requires a serious approach, serious research, serious risk analysis and serious discipline. It's crazy how people feel that having a casual approach can help them. Even SEBI has published a report in early 2023 that reveals 9 out of 10 individual traders in equity, futures and options segment incurred losses between FY19 to FY22. This is the hard truth of the market. To clearly highlight the importance of serious approach, Sher Khan, a full-service broker, launched a very informative public service ad as well. It's high time we spread awareness about the risk of being casual in the market, because if you have a casual approach, to market mein mata. I provided the link to their website in the description. Do check it out and share about this ad with your friends as well. Now let us try to understand the future growth prospects and key growth driver for the company. So if you look at the alcoholic beverage industry, India is one of the fastest growing alcoholic beverage market in the world. Alcoholic beverage mainly include three categories: spirits, beer and wine. Interestingly, the per capita consumption of wine in India is less than 1% of alcohol consumption compared to the world average of close to around 13%. But there are some very important factors that are driving the growth of alcohol industry in India, including the wine industry. First biggest factor is every year, nearly 1 crore people become eligible for alcohol consumption. That makes India one of the most attractive market for alcoholic beverage. And within that, wine has a very small base. But now wines are getting popular with increasing preference for premium food and drinks and its perceived health benefits. Another reason for growth is acceptance of social drinking. Earlier, drinking was considered a taboo in India. But now there is more acceptance for social drinking, especially with increasing participation of women in the workforce and disposable income. There is increasing trend for wine consumption among women. Moreover, there is also a strong traction for wine tourism that is also growing big time. Sula Vineyard has created a strong moat with more than 50% market share in Indian wine industry. Today, Sula wine brands have a strong awareness in India, which is not easy to build. Moreover, the entry barrier in the sector are very strong. First of all, winemaking involves the investment of capital and time for the development of vineyards and investment in relationship with farmers to ensure supply, as well as expertise in the making of wine. And wine may require a few years before it is ready to be bottled. This long gestation period from initiation to final product creates an entry barrier for new players. Then wine business has a very high inventory business model compared to other alcoholic beverage. There's only one harvesting season per year that result in high year-end inventory. So working capital is high as compared to other alcoholic beverage. Then another challenge in wine industry is every state in India has a separate policy for alcohol procurement, pricing and distribution. It makes it difficult for alcoholic beverage companies in India to establish a standard operating procedure for sale and distribution. If you look at the past performance of the company, its sales did fall during COVID but recovered sharply from 300 odd crore to 500 plus crore. Its margins also fell down during COVID, but look at the recovery from 14 to 19, 27 and now 32%. That's a very good margin. Due to improvement in margin, its operating profits have jumped from 50 odd crore to 160 plus crore. Although its taxation were volatile in the past, but now it has stabilized and the PAT has also grown at good rate. Company's return on capital has also increased from COVID lows to now at 20%. Although the inventory days are very high, but that's because of nature of the business when they store wine for aging. Although cash conversion cycle is also very high, but it has improved as compared to last year. Company has been generating positive cash from operation consistently. Company's strategy is to increase the focus on the underpenetrated market in major metros like your Chennai, Kolkata, then the tourist market of your Kerala, Rajasthan, Goa and other tier 1 and tier 2 cities across India. Company has been doing capex to increase its capacity. In FY23, it invested around 85 crore and this year they have a plan to invest 55 to 60 crore. So total of around 145 odd crore of capex in expanding the production capacity. It's also expanding its wine tourism by adding a few rooms, but that's an asset-light model with partnership with resort owners. Sula is also one of the world's most sustainable wine producer with around 60% of power requirement fulfilled by solar power installed at their premises, and it's increasing its renewable energy investment this financial year with the goal of powering 70% of their operation with solar energy by 2026. Sula Wine had its IPO last year in December 23 at upper price band of 357 and currently the share is trading at around 450 rupee. At this level, it commands a market cap of around 4,000 crore. So small company but a leader in the sector. As the industry would grow, Sula would certainly benefit from it. In terms of valuation, it commands a P of around 40. So valuation looks reasonable, neither too high nor too low. If you look at the shareholding pattern, the promoter holding on the screener is not showing the right picture. Its promoters Rajiv Samant has around 26% stake and showing sharp reduction in public holding and sharp increase in FIs and DIs. So basically in public holding, there's an investor called World Invest, which is the investment arm of InBev that invested long back in the company. So it should not come under public holding. Now they have reshuffled it to FI section, but now their holding has reduced. Although it has been absorbed by other FIs and DIs that include big names like Goldman Sachs, Abu Dhabi Investment Authority, Morgan Stanley, and DIs also include big names like SDFC, Quant, SBI, Aditya Birla. In public sector, it has also ace investor Mukul Agrawal that has also increased stake in the company in March quarter. So overall, around 47% stake of Sula Wine is with institutional investors and HNI that shows a strong trust of the company and potential growth in the future. Now let us look at the key risk. So first risk is business is subject to licensing, excise taxes and regulation from government. So any negative development on regulation, tax or licensing can negatively impact company's business. For instance, Sula Wine has received an excise duty order from Maharashtra government worth 116 crore. All the company management has mentioned that they have a strong case to defend this excise duty but still not resolved. So please keep that risk in mind. Such incident can hamper company's business and profitability. On the other side, favorable wine policies like availability of wine in regular retail stores will further boost the wine sales in the country. Then second risk is dependence on climate. Since grape harvesting is dependent upon right climatic condition, any adverse climate condition could impact the harvest of grapes and eventually its business. Then third risk is capital intensive business. Since they have a capital intensive business that require high working capital, any inability to manage working capital can negatively impact company's profitability. Also, please note that company's 1-year lock-in period would end on December 23. So there can be some selling pressure as well. So in this video, we discussed the fundamental analysis of Sula Vineyard. It's a small cap company with a market cap of around 4,000 crore, but a leader in Indian wine business with more than 50% market share. Company has a strong moat with top brand recall, a high entry barrier in the industry and experienced leadership. Financially, company has grown at a very good rate and financials also look good. In the future, I expect the trend for wine consumption to increase due to increasing acceptance of social drinking, increasing popularity of premium food and drink, and considering all these factors, now I understand why top foreign and domestic institutional investors are bullish on this company along with ace investor. At current level, company's valuation looks reasonable. But before you consider investing, make sure that you clearly understand the key risk that can be the antithesis for its growth. And if you're looking for a good brokerage platform that can also provide research report and other support, you can explore Sharekhan website. I provided the link in the description box. Now let me know which company you want me to cover next. I'll see you next video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.